Good morning, class. I hope you can see me, maybe not as clearly as in the past, but I think we can do without a look at my mug all the time, huh? Anyway, I guess we're up to chapter 4 in accounting 454278 ACC 110. So let us go ahead and proceed into chapter 4. It's a short chapter, but it is an oh so crucial chapter, because here we're going to learn how to move things into the general ledger. Right now, the work we did in chapter 2 and 3 was plus minus, up, down. Here, we're going to keep working on with our debits and credits, okay? So how do we take a transaction, something as simple as getting the electric bill in the mail? How do we get that into our general ledger for all posterity? That's what we're going to try to learn here. Describe the flow of data from source document to the trial balance, okay? Source document is any piece of paper. It can be a bill, an invoice, a cash register receipt, some kind of other receipt. It can be a copy of an email, could even be a text, a source document that tells us what we need to do. And we're going to analyze the source document. We're going to enter it into the general journal, which we're going to be learning here. And we're going to post to the ledger, which we'll learn here, and then prepare a trial balance. So that is the set of 4 steps involved, okay? You're going to analyze, enter, post, and prepare. Describe and explain the purpose of source documents. Well, I think we all get to feel now what a source document is. It's a piece of paper, almost any document that provides information about a business transaction. And it kind of triggers the analysis of what happened. Begin the process of entering transactions in the accounting system, and they're objective evidence of business transactions. That's a good word. They're objective. It's not somebody's guessing or an opinion, and it's filed for future reference. You have objective, verifiable information. For example, you get that famous electric bill in the mail, you check it out, you compare it to prior months, it seems reasonable. So then what do you do with it? You go into your accounting system and you enter the transaction into the system. Now you have a general journal completed, a journal entry, in other words. You completed a journal entry. At that point, you haven't updated anything. All you've done is record it into your system. Now we want to move it into the general ledger part of your system. And we're now going to post it to the general ledger, which is a separate step from journalizing. And then when we're done with all the postings and everything looks good, we're ready to prepare our trial balance and prepare financial statements. So the source documents, huh? And they're giving you other examples: cash payments, check stubs, receipt stubs, sales tickets. The list is endless, okay? But source documents are often what you need to get going on a transaction. It's time to pay the electric bill. We haven't paid the electric bill. How come? Well, we haven't got the electric bill yet. We can't do anything except wait for the electric bill. We're going to have to accrue something in the meantime. Describe the chart of accounts. The chart of accounts, that's the list of all of the folders used by a business, and it's reported in numeric order, and it's used to determine which accounts are affected by a given transaction. Simply stated, the chart of accounts is a list of all your, I'm going to call them folders, all of your accounts, starting with cash, accounts receivable, inventory, prepaid, non-current assets, goes in the order of assets, liabilities, equity, revenue, and expenses. Those are all the folders that the company opened up in the general ledger that they deem necessary to judge how the business is doing. And they're just showing you a couple of the new ones here. What they're pointing out here is that typically assets begin with a 1 in your chart of accounts number. Liabilities begin with a 2, equities 3, revenues 4, and expenses 5. And I've never seen it any way else in my working world. So that's pretty typical stuff, okay? Your assets begin with 1, liabilities 2, etc. Now let's journalize. Let's journalize. The general journal, a day-to-day listing of all transactions They provide a record of all transactions, all activity completed by the business, referred to as the book of original entry. Oh, the simplest journal form is a 2-column general journal. 2 columns, one for debit, one for credits, and then a column to put the account name down and a date, huh? Any kind of transaction may be entered into a general journal. The act of entering transactions in a journal is called journalizing. For every transaction, you're going to have the following 4 things. You're going to have a date, which is super important. You're going to have a title. What is the account that you impacted? You're going to have the amounts, the dollars, and a very important thing called a brief description. When I say brief, I mean very brief. You paid the electric bill is your journal, is what you did. You're going to debit electricity expense. You're going to credit cash, and you're going to have an explanation that's going to say to record payment of utility bill. Something even simpler than that you can put down. The description is very important because 6 months from now, you're not going to remember what a particular journal entry was about. You wrote, some unusual journal entries last January. The auditors aren't even going to come into your business probably until February, and they're going to pull a journal entry out, and you're going to look at it and say, I have no idea what the heck this is. But when you pull the journal entry online or however, you'll see that description, and that'll help you get your memory going. But there's another even more important reason for having a brief description. If you can't write a very simple, cogent, brief description, you may have a problem. Your entry could be very wrong. Because if you can't write it out in just a few words, a short phrase, there could be something wrong. You might be forcing something. So the description, quite useful. So let's look at some journal entries, huh? Uh-oh, Mitchell Business. He's opened up his pizza business again, huh? Is this the 3rd time we're looking at his darn pizza business? I'm getting a little sick of this guy. But let's go with it, huh? We'll go with the flow. Mitchell opened a business with a deposit of $5,000. Notice transactions now have a date associated with them. Here we go. Enter the date. You only put the year at the top of the page. You don't need to keep putting 2021, 2021, 2021. Just put the year at the top of each page, and that's more than sufficient. So you enter the date, June 1st, and you tell the world that you're debiting cash. There's the debit to cash. And now on the second line, you have Mitchell Williams Capital, and then you have $5,000 credit Mitchell Williams Capital. And notice the explanation. Notice the description. Owner's original investment in delivery business. I could have cut that down to owner's original investment and just left it at that. So the explanation is entered on the next line, indented an additional ½ inch. So let me point something out that I missed here originally. Look at that credit. That credit is always indented a little bit. They're saying ½ inch. I don't know anybody who actually measures it, but it needs to be indented somewhat, okay? That's the expectation of auditors and people who look at financial statements, that the credits will be indented in a few spaces, okay? And here we go. The explanation, and then you skip a line for the next transaction. You could have a compound entry, huh? An entry requiring more than one debit or more than one credit. And debits are typically listed before credits. Let's try to get into that habit, okay? Debits get listed before credits. A compound entry is any entry with more than 2 items in it. You have to have at least 2, right? 2. You must have 2 accounts in every single journal entry. You can't have less than 2. You can have at least, you must have at least 1 debit, and you must have at least 1 credit. You can have 1 debit and 100 credits. You can have 1 credit and 100 debits. So take a look at these entries here. These are the entries we did in the last 2 chapters where we bought the supplies. You remember, for $80, we credit cash. For the first time we did it, we did it along the horizontal line with the plus minus world. Then we did it with posting entries. So now we got cash, credit accounts receivable. There he received some cash from delivering something. Now, what we've just shown you is how to prepare a journal entry, what a journal entry looks like, okay, what the components are. You're sitting in your computer system, whether it's QuickBooks or Oracle or some big fancy thing, and you're entering journal entries. You've been away from your desk for most of the morning. You've been checking out some source documents. You've been down in the store, if it's a store, talking to some of the managers down there, getting their signatures on things. And now you've got all these source documents. You come back to your desk, to your office, and you sit down and you're going to journalize them. And that's what we just showed you. You debit and credit everything, journalize, journalize, journalize. And then you stop. At that point, you have not updated the general ledger. All you did was fill out the forms on your computer. We need to get them into the general ledger, which are the books of the company, and get ready to prepare trial balance. So you're going to look over your journal entries one last time. You're going to glance at them. You're going to go over them. You're going to say, I'm happy with them. And then you hit the button that says post. And as soon as you hit post, you have updated the general ledger. And that's a permanent record that can never be erased. If you made a mistake, the only thing you can do is reverse the journal entry and then put it in correctly, okay? General ledger. These are the T accounts. Remember we said that the T accounts mimic the general ledger? They absolutely do. So let's take a look at this. Used to keep a complete record of the debits and credits made to each account. So in the general ledger, you're going to open it up and your first page is going to say cash. And you'll see all the debits and credits for cash. Next page will be accounts receivable, say, all the debits and credits and the balances. So the general ledger is used to keep a complete record of the debits and credits made to each account as a result of entries made in the journal. And the numbered in the same order is the chart of accounts. And T accounts were introduced previously. However, businesses are more likely to use a version of the account called the general ledger account. In the real world, the T account is just a piece of scrap paper. And it's a very useful piece of scrap paper because it helps you analyze. You could be in a meeting with 6 people from the accounting department and trying to figure something out. And inevitably, somebody's going to go up to the whiteboard and start throwing T accounts up and putting numbers in to see what happens. So look at your T account. It's hard to tell the T account from the general ledger, isn't it? There's our T account, and there's our general ledger. Oh, hello, Robert. How long you been there? I just noticed you for the first time. You're mute.
About 5 or 6 minutes I got here.
Okay, this is a very short chapter. We're getting through it. Is that a New York Jets sweatshirt I see?
It is.
Does that elicit much laughter when you walk around town? No?
People wonder what the story is, how a guy from Carpinteria is a Jets fan.
Well, you are a Jets fan. Good for you. Good for you. I'm interrupting this class right now, and I don't care for a moment of sports. I grew up back in the 50s. I was in love with the Baltimore Colts.
All right.
You know where I'm going with this. And when they lost to the Jets in the Super Bowl in 1969, when they were like a 19-point favorite, I'm still traumatized by that game. So I kind of hate the Jets, Roberts.
So I shouldn't have worn the sweater then.
Oh, no, you're dead in the class now. You're doomed. No, I'm only kidding. I'll let you go, man. I'll go back to work here, okay?
All right.
All right. T accounts. Okay, we know what a T account is now. Look how it mimics the general ledger. We have an entry A. You see entry A, $5,000. There's your debit for $5,000. We have an entry B, cash. We credit cash for $2,000. Debit $2,100. You get the idea? So we are mimicking the T account in this section of the general ledger. But notice what we're doing to the right. We're keeping the running balance going. We have $5,000 beginning balance, or rather the first transaction. Then they spent $2,000, reduced the balance to $3,000, spent a little more money, reduced to $240, increased 21, etc. So the general ledger is the T account plus another T account, if you will, for the running balance, whether it's debit or credit, and you have a space to put the date. And like we said earlier, you only put the year on the top. That would be a waste of ink to do otherwise. And then in the item here, you might have a note or something, or you might have a posting reference to the general journal, okay? Where it says posting reference, you might put in J-22, which indicates that those are the entries you posted June 22. The item column, that could be a free form, whatever you might want to put in there, okay? If you want to put in owner's investment, you can do that. Posting to the general ledger. So the process of copying to the general ledger is done at various intervals, okay? 5 steps, to posting. Enter the date of the transaction, enter the debit or the credit, enter the balance of the account. If the balance of the account is 0, draw a line through the debit and credit column. I'm not going to worry about that. Enter the journal page and the posting reference if there is one, and enter the ledger account. So you're filling all of this. You've already posted this. I'm sorry, you have not posted. You have already journalized all this. Now, by just hitting that post button, this is what you get. The general ledger as you see it there. Posting to the general ledger. And they're giving you a simple look here. Look at the journal entry, the general journal. You debit cash, you credit capital. And notice the explanation. Notice the explanation, owner's original investment. Notice that they indented the credits. That's very important. And then you further indent the explanation if you have one. So as soon as you hit post, what happened to this $5,000 debit to cash? It shows up in the general ledger, okay? So they're showing you posting a debit, and I guess they're not going to show us posting a credit, but you get the idea. Okay, what have we done now? It's the end of the month. We have journalized all of the activity as far as we know. We have now posted everything. Did we get everything in? We're double checking. We get the electric bill in. Did we process the payroll, etc.? We're happy that we got everything in that we need to get in. Now we're ready to prepare the trial balance. And the only thing the trial balance does for us is prove that debits equal credits, okay? They can be prepared daily, weekly, monthly, or whenever desired. Typically, they're prepared after all the transactions have been journalized and posted. The trial balance, it's not a financial report. It's just a look at, it's just a snapshot at the end of the month of all the balances in your ledger, starting with assets, liabilities, accounts payable, capital equity here, revenues and expenses. All it proves for us is that debits equal credits, but it serves a very useful purpose. Let's assume that this trial balance is 100% complete and correct. We can now prepare the financial statements right away. We prepare them from the trial balance, hence its importance. Now they're talking about finding errors. I'm not going to worry about this at all, really. Even though the trial balance is in balance, it could be wrong if an entry. Well, all they're doing is giving you common sense stuff here. Double check your addition, find the difference between the debits and credits, and it might be a familiar number that pops out. Divide the number by 2. I'm just going to show you one thing. The divisible by 9. This actually used to be a very useful trick, and you might still have to resort to it. If you transpose an error or slide a number, what I mean by that, if the number was supposed to be 250, but you made a mistake and you recorded it as 520, which is possible to do. We're all human. The eyes get tired. You make a little mistake. Any difference between numbers that were slid like this is divisible by 9. And that's just a little mathematical trick. You keyed in 81 instead of 18. The difference is 63 divisible by 9. Now, why do I tell you this? Because in the old days, when everything was done in pencil, you'd have to run a trial balance, and you're putting those numbers in by pencil. You get to the bottom, and then you find you're out of balance. Oh my goodness, the trial balance here says 1,350,218, and this one says 1,350,000 instead of 530. You would divide by 9. If you came up with a big fat 9 number that yielded no decimals, you could pretty well assume it was a transposition error, and makes it a little bit easier to find the difference. You're not going to have that problem so much now in Excel or using the computers, but you might have to be putting in long columns of numbers where you got to match them up. And if they're off, the transposition error is great fun. If tips don't work, double check, huh? This is important here. Erasing is not acceptable. It may suggest you're not trying to hide anything. Make the correction in a manner that's easy for others to observe and understand. Make a correcting entry. And they're just showing you a correcting entry, which I don't agree with the way they're doing it, by the way. And believe it or not, that's our whole chapter for today. What do you think, Robert?
It's pretty quick.
Yeah, not too bad. How did you become a Jet fan anyway?
Growing up after the Rams and the Raiders left town, I needed a team. So, I picked the Jets, not knowing what I was getting myself into. My brother picked the Bengals, so it's worked out for him now.
Wow, isn't that something? Well, that's encouraging for the Jets. The Jets beat the Bengals soundly this year.
I think we did. Yeah, we had one of our 4 wins.
Yeah. The Bengals won 4 games last year, and they they're in the Super Bowl this year. Yeah, the Jets have been cursed since the days of Joe Namath, But have you ever seen that game on the Super Bowl 3 on the internet at all? Ever watched a little bit of it?
The game
Jets and Colts, 1969.
I have not seen it.
You don't have the time now, but the Colts were super big favorites. Nobody thought the Jets could stay anywhere near them, and the game began with the Colts just killing them, moving the ball down the field. They miss an easy field goal. They come down the field again. They throw it. Everything went wrong for the Colts that could go wrong. But the Jets were a really good, underrated team, and they whooped the Colts fair and square. But anyway, I digress into some traumatic issues of my past. You have any questions with the curriculum here, Robert? How's it going?
No.
Keeping up
okay.
What?
Wait, I think I had a question from last week.
Sure.
Let's see what I write down. Okay, so when it was talking about supplies, it's 1 month when it's an asset, and if it's over a month, it becomes an asset. But if it's under a month,
you're on the right track. Yeah, when you buy an asset, when you buy something, it's an asset until you actually use it. Okay.
Yeah.
Insurance, by definition, is an asset. At the time you bought that insurance, it covers you in the future. So when you buy the asset, we're going to call it an expense called a prepaid expense called insurance, prepaid insurance. That covers you starting next month. Next month comes, you now take 1/12 of that insurance policy, assuming it's a yearly policy, and debit insurance expense, and then reduce that asset for the same amount. So what we're saying go ahead.
If you're buying supplies, but you only get 2 weeks worth of supplies, would it
If you're buying supplies and you're going to use them in 2 weeks, we'll just expense it when we buy it.
Okay.
We'll just debit supplies expense as opposed to prepaid supplies.
Okay.
Yeah, that's a good
question. So about a month. So if it's about a month, you can call it an asset. So you use it, but
a month is usually the cutoff for current assets, current liabilities. Okay. But think of it this way, Robert. It's the month you actually use the goods that becomes the period of expense. You bought $10,000 worth of supplies in the middle of the month, okay? In the middle of January. Now today is February 2nd, and you guys are closing. So you send me out into the supply room, and you say, hey, Bob, count the supplies out there. I come back to you and I say, there's only $10,000 worth back there. That tells you used 500. So now you debit the expense for 500 and relieve that asset to bring it down to 10,000. And you're going to carry that forward until you use up all the supplies. It's part of accrual-based accounting. Expenses and revenues are recorded at the time they take place. It has nothing to do with the movement of the cash.
So this one I wrote down, it came up on the quiz 3. Is there a scenario where a drawing account is decreased?
The drawing account is decreased?
Yeah.
That was
you
a
always-
question.
Well, no, something came up in the quiz, so I wrote down. So I wrote down that question because I guess there was where you would put the increase in the drawing account, but is there a scenario where there'd be a decrease in the drawing account?
That's a great question. Nobody's ever asked that. I never thought about it. Yeah, I guess it would be. The owner comes to you and says, write me a check, Robert, for $1,000. And you're a good employee. You tell him, you say, what's it for, boss? And the boss might say, none of your business. Or he might say, I'm taking my family to Las Vegas. At that point, you know it's a draw, right? It's personal. So you're going to increase the drawing with a credit. Boss's trip is canceled. He might come back 3 days later and hand you back the check. Then you would decrease the drawing. That's the only scenario that I can see that would ever happen.
Okay. I don't know how I came up with that. It says question number 2 from quiz 3. So I came up with that question.
Yeah, how'd you do on a quiz?
I think I've done fine on all of them. Yeah.
Good for you.
Yeah.
Good for you. Yeah, this course is, it's was a 3-credit course, but boy, does it prepare you for 230 when you get to there.
It will.
Oh God, yeah. You'll walk out of here knowing your debits and credits and what the trial balance is all about, all these things. Should put you in pretty good shape for accounting 230.
All right.
Yeah,
I'm excited. It's my major, so
no, that's great.
Yeah.
Well, we'll see what
I've been
happens.
lucky
I guess the next step is the draft, huh? The NFL draft, and see what the Jets can
yeah,
do.
well, we'll see. We'll see.
Who
knows?
They passed on Patrick Mahomes. They said, no, we don't want Mahomes.
Yes, there's when you go back and look at the misses, it only
There was a wise
traumatizes
ass.
you.
There was a
It could've
wise
been.
guy on ESPN a couple of years ago when they were talking about the Jets. He said the Jets don't seem to understand you're supposed to pick good players. All right, I'll stop teasing the point. I'll stop teasing.
No.
The Jet fan.
Yeah, it's deserved, but we
I'm
had
a
a few good
giant.
years.
I'm a big Giant fan, so you can rip me.
Oh,
to
you
bits.
aren't. Are you really?
Oh God, yeah. And they're
So-
worse. They might be worse than the Jets, to be honest with you.
Yeah.
No.
Yeah, I would say this past year you guys were worse, but
Yeah.
I would have guessed you would have stuck with Baltimore, but no. Once Baltimore
You know why
left
I
town,
hate
you
them?
were part of the new team.
When they moved to Indianapolis, I was so angry. It just pissed me off. It's more like a divorce. You're in love with a woman for a long time, and then you have a divorce. So I went to court and divorced the Colts. Now I'm back to the Giant fan. So
Yeah,
we'll see how it goes. All right, I'll let you go then, Robert. If that's it.
That's it. Thank you, sir.
All right, we'll see you next week, pal.
See you next week. All right.
See you
Thanks. Bye.
Bye bye.